Hello everybody, this is Lara with your end of the week video for US oil for the trading week ending Friday 2nd of October. I am still expecting that oil is in a new bull market and it's completed a first wave up and it's on a second wave correction. If my targets for the correction are wrong, they may not be low enough. For this particular market, when it has a new trend, it can have really deep corrections. Early on in the trend, I expect oil is forming basing action that may last years before a new bull market begins to gather with strength. My target for support is 23.05, but it may not be low enough. The monthly chart for my Elliott Wave count for oil, my alternates are invalidated. This is the only Elliott Wave count I have left now for oil. This wave count sees oil resuming the bull market back from this low here, because this movement here is a corrective structure. In Elliott Wave terms, it's a double zigzag, and they only appear in corrective waves, which means a second wave may be over here, which means a third wave may have begun down here. The third wave, which I'm labelling Supercycle 3, must move beyond the end of the first wave. So I don't have a target for it because I'm not confident of exactly where the first wave begins, so I can't apply a Fibonacci ratio between the length of Supercycle 1 to the length of Supercycle 3 to calculate a target. But Elliott Wave rules tell us the third wave would be expected to move reasonably above the end of the first wave. That's so that the next fourth wave correction can unfold and remain above first wave price territory. This third wave may only subdivide as an impulse. Let's look at how it may be beginning at the weekly chart level, where this low down here is this point down here. At this weekly chart level, I'm going to label Supercycle 3 with Cycle 1 over here, Cycle 2 to continue lower, and then we'd expect 3, 4 and 5. If Cycle 1 is over here, then Cycle 2 may be expected to continue for a few more weeks, possibly months, and it may not move beyond the start of Wave 1. It may be relatively deep. Let's take a look at the first daily chart, which will see Cycle Wave 1 over up here, this point up here. The first daily chart considers Cycle Wave 2 unfolding as possibly a relatively shallow zigzag. If this target is wrong, it may not be low enough. This would be the next expectation. If Cycle 2 is unfolding as a zigzag, then Primary A within it may be a complete 5-wave structure. Primary B could be a complete zigzag, or it could continue sideways as a triangle, double zigzag, or a flat correction, or a double combination. There are still multiple structural options open for Primary B to continue, and for that reason I'm going to leave the invalidation point up here. If I've analysed Primary A correctly as a 5-wave structure, then B may not move beyond its start above 43.77. If B is over here, and it looks like it may be this week, and C may have begun, then C should continue lower as a 5-wave structure. I've calculated a target at 2 degrees at cycle and primary degree to give us a target zone. Primary C may subdivide as a 5-wave structure. Intermediate 1 and 2 may be complete. Intermediate 3 may continue with an increase in downward momentum, particularly minor 5 to end intermediate 3 may unfold in a couple of weeks, maybe 3 or 4 weeks' time. It may exhibit an increase in downward momentum. For this particular market, fifth waves to end third wave 1 degree higher can exhibit quite a lot of strength. Alternatively, if we change the degree of labelling within Cycle Wave 2, it's possible Primary A may be incomplete. It may be unfolding as an impulse. 1, 2, 3, 4, 5. 3 has to move beyond the end of 1. 4 has to unfold and remain below Wave 1 price territory. And then 5 would be expected to move lower to end probably below the end of 3 to avoid a truncation. When A may be a complete 5-wave structure, then B may unfold and it may not move beyond the start of A. This labelling expects Cycle Wave 2 may end deeper, closer to the 0.618 Fibonacci ratio of Cycle Wave 1. These first 2 daily charts have about an even probability. At this stage, it does matter which labelling we look at, and we need to consider both possibilities. But in terms of direction, they're both expecting more downward movement. Alternatively, we can move the degree of labelling within the start of the bull market for oil down 1 degree. It's possible cycle wave 1 may not be over. This could only be primary wave 1 within cycle 1. At this point, it just doesn't make any difference to the expected direction or how the waves are going to unfold, but in coming months it may make a difference. So I just want to illustrate that I'm open to considering both degrees of labelling here. At the weekly chart level this week, oil has moved lower with a push from volume, and so I'll expect more downward movement next week. Price is closed near the lows for the week, although it hasn't managed to make a new short-term swing low. But I will expect that we may have tested resistance about 42, and now price is starting to move down and away after forming this rounded top. ADX is declining at the weekly chart level. There's no clear trend. ATR declining further as price moves sideways. On balance volume this week gives us a weak bearish signal to support the bearishness in volume, so I'll be expecting more downward movement next week. RSI is well in neutral territory. There's plenty of room for price to continue lower, and stochastics in neutral territory. At the daily chart level, downward movement may find support. We may see a little bounce again about 35. If price closes below support here, then look for resistance about there. There is a bit of a push from volume, pushing price lower for Thursday and Friday overall. At the daily chart level, ADX indicates a downward trend. ATR may be showing some increase as price starts to fall. A bearish signal from on-balance volume at the daily chart level and weekly chart level supports the idea of more downward movement next week, and this supports the Elliott Wave count. RSI still in neutral territory, hasn't reached oversold at this time frame yet. Stochastics also neutral. MACD, I should update that, has a bearish crossover, also supporting the Elliott Wave count. That's all from me this week for my US oil analysis. I hope all of our members are staying safe and staying well.